This is like the risk. This is what I use to buy and sell Bitcoin. Like it's this chart right here.
Today I sit down with quant analyst Benjamin Cowen of Into the Cryptoverse as he shares his forecast for Bitcoin in 2025 based on the data.
Down like that into 2026. And my guess is it would try to find support like somewhere.
We also talk what's really next for Ethereum.
Arguably, what's happening to Ethereum right now is what needs to happen.
And watch today's whole video.
This is like the risk. This is what I use to buy and sell Bitcoin. Like it's this chart right here.
As Benjamin shares the exact chart he uses to know when to buy and sell Bitcoin and how to win. When you say you buy and sell with this chart, would you say, if you want to trade like a quant analyst and you want access to all these charts and more, use code Altcoin Daily for a limited time discount, link down below. The long-term audience of Altcoin Daily knows you, but just as a reminder, on your pedigree, could you just remind the people of your background?
You mean like before crypto?
Before crypto, and then when you got into crypto.
Okay, so yeah, sure. I was undergrad in mathematics, and I did a minor in physics. I did work at NASA Johnson Space Center for a little while, and NASA Langley in Virginia. Then I graduated, and then I went to grad school, and then I did a master's in nuclear engineering, and then a PhD in nuclear engineering. And my dissertation was on radiation damage in ceramics using molecular dynamic simulations and in situ transmission electron microscopy. And then I did a postdoc at a national lab where I studied high energy density physics and equation of state. And then while I was doing that, I started my YouTube channel and met you guys, and here I am.
And when you heard about Bitcoin, you got it instantly, or it took you a while?
I first got into crypto back in 2011 because I said I was a math major. One of the electives that we were able to take was cryptography, right? Not cryptocurrency, right? It was just cryptography. So I first got into cryptography back in 2011, heard about Bitcoin, and really started becoming interested in it in 2013. But I don't really fully feel like I fully grasp it because, back in 2013, I remember watching it drop from like $1,100 or something to like, back down to $100, $200. It wasn't obvious it was ever going to come back, right? It just kind of felt like that might have been it. But I think by the time we got, out into 2016, 2017, it became more obvious that like, hey, this is actually going to be around for a while. Like this isn't just a fad, and it'll be here in the future.
Well, I love the different perspective you bring to the crypto YouTube, crypto content creator space of math, data, quant analysis. So let's jump right in, Benjamin, and maybe just start for me, big picture. Is Bitcoin still in a bull market, or is this the new bear market?
Yeah, look, I think a lot of it is going to depend on what it does in the next month or two. There's obviously a lot of talk about, the 4-year cycle. Maybe I could actually share my screen. All right, yeah. So a lot of people are very familiar with the with the 4-year cycle, right? And they should be, because Bitcoin has operated very well under the assumption that it is a 4-year cycle. The 4-year cycle is basically, though, I think that you have a low approximately every 4 years, right after the midterm year. And so we're so used to right translated cycles where you go up for 3 years and down for 1, up for 3, down for 1, up for 3, down for 1. The question is like, are we going up for 3 and down for 1, or are we just going up for 2 and down for 2? We've never seen a left translated cycle, and I hope we don't get one. But there's some evidence in historical charts for the S&P 500 to show you, what could lead to that type of stuff. And at this point, I think there's still hope that it's not this, because, in order to get a left translated cycle, like look at the 1970s, right? One of the things you'll notice is that every major low was every 4 years, right? And in the midterm year, right? 1966, 1970, 1974. The first cycle was a right translated cycle where you went up for 3 years and down for 1, and then up for 2 and down for 2, and then up for 2 and down for 2. So when it's a left translated cycle, the top normally occurs around the change in administration, presidential administrations. That's when it normally occurs, either December of the election year or January, early part of the post-election year. Now, the reason you can get left translated cycles is when you get things like the inflation rate, right? If you look at the US inflation rate, when it starts to skyrocket, that's what can lead to a left translated cycle. So it's good news that we've seen inflation go down recently. We actually saw headline inflation drop, I think to like 2.4% or something. So that's good news. And then the other thing, of course, is the unemployment rate. my perspective right now on this stuff as it relates to Bitcoin, because that's ultimately what people care about, right? They don't really care about what's going on in the 1970s. What ultimately I think is going to make a big difference here is the 2024 high. I think that there's still enough investors that confidence has not yet been broken in the cycle, that there is still a chance that it's a right translated cycle. And I would say that confidence exists as long as Bitcoin basically stays above the 2024 high. Okay, so
which is
my
69.
or sorry, 73K on a weekly close. And I think it could go as low as 69K, the 2021 high, right? I think it could go as low as 69K on a wick, and the integrity of the bull market is still maintained, right? If you look at 2017, you had your 2016 high, and then you can see that Bitcoin ultimately went below that high, and the cycle still continued, right? And it was about a 35% drop to get there. And if you look today, I mean, Bitcoin has gone down, right, about 31%, 32%. So if it were to go down 35%, that would be a wick below the 2024 high. I think that's okay. I think that as long as it stays above that, we can maybe get back moving in the right direction. The longer it takes for that to happen, though, if we were to operate, I mean, look, you and I have been in crypto for a long time, and we not only did we live through 2022, we also lived through 2018. I think in the back of our mind, we know that 2026 is probably not going to be a great year if history is kind of any indication. Uh, and so the longer it takes for that process to play out, like obviously the odds go down because we just won't have as much runway. But I think that's kind of the critical level for Bitcoin at this time is just holding that level, above the 2024 high on weekly closes, and certainly above the 2021 high on wicks, right? You really wouldn't want to go below that level. I would argue though that if it is a left translated cycle, which hopefully it's not, right? I mean, let's try to be optimistic. Hopefully it's not. But if it is, what you would expect to happen is you would expect for Bitcoin to not find support in this level, and instead it would go in the low 60s, right? And if it were to go into the low 60s, I think that would, correct me if I'm wrong, but I think that would actually be below Saylor's cost basis, which would not be a good thing. So my argument is as long as we're above the 2024 highs on weekly closes, there's still hope of right translated cycle. If it's a left translated cycle, what you would expect is the drop down here. If it drops down there, I don't think you should panic sell. I think you would get a large bounce, a macro lower high that you could probably sell into in the third quarter of the year. Those are my thoughts right now, and we'll see. And the bullish case for the S&P, there's plenty of bearish cases, right? I mean, if you look at the S&P right now, it hasn't really been doing that great. But the bullish case, right? If you wanted to sort of be optimistic about it, because again, I know a lot of people don't care about the stock market, but we know that if the stock market drops, it's going to take Bitcoin with it more than likely. The bullish case for Bitcoin is that if the stock market, this is the stock market divided by M2, the money supply, we actually had a really similar drop by the S&P divided by M2, very almost exact type of drop back in 1998. And then there was still somehow another rally left in the tank. So, like it's possible that you could see it play out like that. I think a lot of it's just going to come down to whether, sort of the timing of a recession, right? Like, do you get a recession now? If it's now, then you might be here. If it's not, then we could potentially wait until 2026. But I got to be honest. I mean, with the stock market right now, if you were to go look at, and I'll take a breather in like 1 second. I know I'm kind of rambling.
I'm loving it. I'm loving it.
Yeah, for right now, the best view of the S&P is looking at it through the lens of S&P divided by the money supply and saying, look, we need to find support either here or, if not here, potentially a wick below this one, which is where it found support back in 1998. And that would actually correspond to the 200-week moving average, which is where the stock market has found support basically every single bear market, with the exception of the pandemic, for the last 14 years, right? It takes a really deep recession a lot of times for the S&P to go below the 200-week moving average. That's the optimistic view, is to look at it through the lens of M2, because if you look at it just as to what the stock market is doing this year, right? If you look at it, say the S&P 500, and only this year, and you say, well, is it tracking prior post-election years, right? It doesn't look anything like 2017, right? It also looks nothing like 2013. It looks nothing like I mean, maybe it looks a little bit like 2009, but it looks nothing like 2005, and so on and so forth, right? It looks a lot worse. And so then makes you wonder, well, if it's a structural bear market, what years would those look like? Well, 2001, right? That was a post-election year. 2001, it's actually tracking it pretty closely right now, right? It's tracking it pretty closely. If you look at left translated cycles like 1973 and 1977, you could argue that it's tracking those somewhat closely as well. So I think the bull case here is the S&P divided by M2 correlation. But the only way I think that the S&P divided by M2 correlation is going to play out is if something happens for the Fed to make a major change in monetary policy where potentially they just turn the money printers back on and say, look, we're just going to deal with our problems in a couple of years, right? I mean, that's probably the way that it could happen. But I think people need to be aware that if Bitcoin were to break into the low 60s, that could be it. As long as we're above the 2024 high, there's still hope.
By the way, for the folks at home, if anybody out there wants access to these charts into the cryptoverse, you want to be quant analysis, explore these charts, link down below, discount code with code altcoin daily. But Ben, question for you. Let's talk about, I totally understand if we're looking at the Bitcoin chart, the red line you just erased. If Bitcoin can maintain above it, then that's a higher low. So the Bitcoin's still in a bull market. In the short term, if it breaks below that into the 60s, worst case scenario, let's say that the S&P breaks down below the trend line and we get the depression in all markets. This is worst case. What's your worst case scenario for Bitcoin?
Well, I think, I would say worst case scenario for the stock market is just a left translated cycle like the 1970s. I'm not really of the opinion that it's going to be like an 80% style depression or anything like that. I would say, it's possible that the stock market can drop 30 or 40%. We already saw the stock market drop, or it's even possible the stock market could drop 50, right? In a really bad outcome. But look, I mean, the stock market dropped 20%, Bitcoin dropped 40%, right? Or a little more than 30%. If the stock market were to drop another 20%, then you probably would see Bitcoin, go back down to some of these levels back over here, like, from back in 2023 and 2024. What's really crazy is that Ethereum, which I know we're going to talk about, right? Ethereum is here on the chart, right? Like it's at where it was back in 2022. So the fact that Bitcoin is where it's at right now is just sort of like a great advertisement for Bitcoin as to like why, Bitcoin dominance mattered a whole lot this cycle. But look, my guess is that, if basically if it's left translated and sort of the worst case scenario does play out for Bitcoin, it would look something like this, right? Where it just gets rejected here. Eventually it comes back down here, tags that trend line, gets a big bounce maybe into August or something, and then just comes back down and then sort of goes down like that into 2026. And my guess is it would try to find support like somewhere in this range potentially where it was in 2023, and then we just build a base hopefully from that level. I'm really hoping it doesn't play out like that. Like I feel like that would be kind of brutal for the market, but it's something that people should be aware of. Like it can happen, and if it does happen, it would just be a great opportunity because while a lot of the FUD for Bitcoin is that it's never survived a recession, right? So if we were to have a recession, it would die. But I don't think it would die. I think it would survive, and it'd probably be even stronger coming back from it. So those are my views if it does play out like that.
We talked about bear case. Let's switch a little to bull. You were talking about M2 in the S&P before. I'm sure you've
Right.
seen this on Twitter, or let me know if you have. M2 and a 10 to 12 week lag for the Bitcoin
Right.
price. And M2, which for the folks at home is global liquidity, that is increasing. And it's about a 10-week lag. It increased about 10 weeks ago. If it correlates, and they say the correlation is around 80%, Bitcoin should be going up this week, next week. It's time. Do you put any credit into that?
Yeah, there's definitely credit into the idea of like they're never going to stop printing money, right? If they're ever going to, I mean, look at again, like if you look at the S&P divided by N2, it's at the same level it was at back in 1998. The reason that asset prices largely have gone up is just because they keep printing money, and the global money supply continues to go higher. So yeah, I think over a long enough period of time, they're never going to stop printing money. So risk assets are never going to stop going higher. In the short term, we know that those trends can sometimes deviate, right? Like they can deviate for a few weeks, a few months. That's certainly a possibility. One of the reasons, by the way, that the global money supply has gone up so much is because the dollar has collapsed, right? And if you look at the money supply of other countries and you convert it to dollars, right, that conversion becomes more favorable when the dollar collapses because now their purchasing power has gone up relative to the US dollar. So yeah, like I think there is a decent correlation there. And sort of my base case coming into the year was sort of we would see a lot of weakness between February options expiration and March OPEX that it could extend into April, mid to early to mid April. Well, we're in mid April right now, so I'm having trouble like you know sort of fading that narrative. And I've seen everyone talk about it, but even in that case, I kind of would still expect potentially one more drop before, maybe putting in a higher low, right? So you had your low here, maybe put in a higher low and then go back up. There's one thing I want to show you really quick, and it relates to the death cross that Bitcoin just had. One of the things that we've noted is that the last 2 years, the low that we got after these deep corrections occurred right when the death cross occurred, right? So if you look at 2023, you can see that there was a low when the death cross occurred. If you look at 2024, right, there was a low set when the death cross occurred. And so you can see that so far this year, right when that death cross occurred, right, we got that low. So what we're in right now is sort of like this death cross rally, right? So you're going to get the death cross rally no matter what, whether it leads to a higher high or not, or a lower high is irrelevant. You almost always get death cross rallies. We had one in 2021. By the way, we also had one in 2019, and it led to a lower low about a month later. So, and that's my main concern for Bitcoin is that if the money supply correlation breaks down, and then we have to start looking at this, and we go to a lower low and say like May or something, maybe we get like a bad unemployment rate print or something, right? I don't know. The good news is that on our last drop by Bitcoin, it didn't even test the 2024 high. So if there is a lower low, then there's still some flexibility there for Bitcoin to potentially hold that and then hopefully rally off of that level. So yeah, I would say in the short term, I mean things have looked a lot worse than they are right now. I would expect at some point, and even last year, right? Even last year after the death cross, we had this rally. We eventually tagged that 200-day moving average, and then we came back down to form like a higher low. So I would expect at least something like that in the next few weeks. If it's a lower low, maybe we go back to the 2019 comparison. If it's a higher low, then hopefully it's just a right translated cycle, and we see the S&P divided by M2 get a big move up. The problem with the S&P divided by M2, or the issue with stocks, is that the longer that stocks are suppressed in price, the more that'll lead to layoffs, right? And layoffs then lead to less demand, which then leads to lower earnings by companies. So it's a negative feedback loop that we don't want to get in. You could argue the reason that in 1998 we didn't go into a recession, even though the market dropped, right? Even though the market dropped like 20%, is because the market then reclaimed the highs within just a few months, and so companies really had no great reason to lay people off, right? I mean, the stock market was back at new all-time highs. It's if prices stay suppressed, that's what leads to layoffs. So for Bitcoin to do well, you want to see the S&P continue to do well. And if Bitcoin does get another drop like 2019, it could be the same type of drop that it got in 1998, where it first put in a low, it then rallied up to the same level it's at basically now, it then came back down and then swept the low. So if it sweeps the low, watch for Bitcoin to potentially go back down to its own prior low that it just put in a few weeks ago.
Let's look end of the year outlook, and let's pretend that the max fear and uncertainty and doubt is now. It's never going to get worse. Countries caved to Trump or what's worked out. The max pain is now, and it is. The bull market continues. Where could that put Bitcoin by end of the year into 2026?
Yeah, so I would basically, I have this like risk metric that I use, and I would say that anything on the risk metric is theoretically possible. So if we go take a look at that, I would just sort of defer to that. So 0.6 risk is 110K, right? So that's kind of around the current all-time high. 0.7 risk is around 140K.
How does this measure that? Like, what is this?
This is like a risk. This is what I use to buy and sell Bitcoin. Like it's this chart right here. Like it's like the risk metric that I use to like buy
And
Like
what metrics is it taking into account to judge
it,
risk?
it's looking at Bitcoin's historical performance, volatility, and it basically just accounts for diminishing returns from one cycle to another. It's kind of like why, like last cycle, everyone was screaming for 300K, but that would have been without diminishing returns. But if you include diminishing returns, the risk metric was already at 0.9 to 1 back in early 2021, right? So it tries to account for that and say, yeah, like what is theoretically possible, even if you do take into account diminishing returns. Um,
Gotcha.
so yeah, I mean, like 0.7 risk is around 140, 0.8 risk is around 170, right? So it's possible that you could see these prices. You just have to get a right translated cycle, and you need the S&P divided by M2 to get to new all-time highs relatively quickly. So normally, when you get right translated cycles, you would expect Bitcoin to, it's always hit at least the 0.8 risk level, right? Always in a right translated cycle. So if it's right translated, you would probably expect it to go up to around 0.8 risk at the very least. If it's left translated, then obviously you wouldn't. And 2019 is kind of an example where it had a great rally, but then it still bled 70% into a recession. And then it wasn't until the money printers really got turned back on that we went up into a new all-time high. I mean, the reality is eventually I think Bitcoin's going to go to 300K. I don't think it's going to do it this cycle, but it certainly could do it, next cycle or maybe the cycle after that, depending on if there is a recession or not. I mean, I think it eventually will get there. It's just a matter of when.
So 0.8, very reasonable, given everything you said. That would put Bitcoin around $170,000. When you say you buy and sell with this chart, would you say anytime the risk metric is under 0.4, that's a buy for you? Anytime it's above 0.6, you're looking to sell? Or how do you judge it?
That's exactly what I do. Yeah. In prior cycles, I bought up to 0.5 risk. Like last cycle, I bought up until 0.5 risk. This cycle, I just bought up until 0.4. And anytime it goes above 0.6, I sell like 1/10 of my Bitcoin, basically. If it goes above 0.7, then I might sell 2/10, so on and so forth. But that's kind of how, I mean, that's basically how I navigate the market. I try not to make it any more complicated than that. I talk a lot, right? And I give all these outcomes, but I really just stick to the rest metric and leave everything else to whoever else wants to talk about it. I navigate my actual portfolio just with like, math and risk.
Again, link down below for the audience. If anybody wants access to these charts, use code Altcoin Daily. Benjamin, Ethereum in 2025. What are your thoughts?
Yeah, so Ethereum is certainly an interesting topic. I know we've talked about it before, I believe, on your channel. And I believe the last time I was on your channel, we talked about it. I've been pretty bearish on the ETH Bitcoin ratio for a really long period of time. And the reason is because, and I mean, honestly, like at this point, I think it's really low at this point. But I think the reason it hasn't turned around, I'm not a believer that it's dead or a relic. I'm not. And I know that is a popular view right now. And it might be the right view, right? And maybe it is the right view. But I still am stubborn. I'm stubborn, right? I am pretty stubborn about certain views. I know that last cycle, it didn't bottom until quantitative tightening ended. And I just keep reminding myself that, right? Like until QT ends, it could go lower. And that's basically what we've seen. So I continue to look to see if Powell is going to throw the markets a bone, right? Is he going to throw the degens a bone at any point, anytime soon? Because if and when he does, that's probably when ETH Bitcoin bottoms out against Bitcoin. Or sorry, that's where ETH bottoms out against Bitcoin. And so I think that's sort of the narrative for why it's continuing to drop. Also, the other narrative could just simply be that if the risk-free rate with T-bills is basically the same or higher than what you could get by staking Ethereum, then why would you just not go buy a T-bill if Ethereum just keeps bleeding on its USD pair, right? You're taking on more risk, you're getting less return. And yeah, maybe you're getting some interest, but the underlying asset has been going down. And one of the reasons for that, again, is because the long end of the yield curve is much higher today than it was back in 2020 and 2021 when Ethereum was doing very, very well. So that's my views on ETH Bitcoin. My views on ETH USD, though, are that it went home, and I think we've talked about that before, like about Ethereum going home. And essentially what that refers to is it going to its lower logarithmic regression trend line that's basically fit to quote unquote non-bubble data, right? This is something that we see every cycle happen where ETH goes up for a while, but when it's going up, it's only going up because it's bleeding against Bitcoin, right? And it's only going up because Bitcoin's going up, right? If you were to overlay sorry, if you were to overlay ETH Bitcoin, what you'll see is that there's these periods where ETH goes up on its USD pair, and as it goes up, it bleeds against Bitcoin, right? It goes up, but it bleeds against the king. Here's another great example of it going up, but while it went up, it's just been bleeding against Bitcoin. Arguably, what's happening to Ethereum right now is what needs to happen for ETH Bitcoin to bottom, because it's when these assets break down, when the stock market gets corrections, that's what leads to changes in monetary policy. And we've already started to see that. I mean, the Fed already said they're going to slow quantitative tightening, which they did announce. And so I think this is a process that always needed to play out for Ethereum to eventually bottom against Bitcoin. Because the argument is that if ETH goes up forever, like if it just kept going up forever, it implies that Bitcoin kept going up, which implies the stock market kept going up. And if all that stuff keeps going up, then why does the Fed need to change monetary policy, right? If everything's fine, why would they change it? So in order to get a change, you have to have the pain. Welcome to the pain, right? Like this is the pain for Ethereum. It's always gone to the lower. It's always gone to this lower regression trend line, right? I mean, it went here in 2015. It went here in 2016. It went here in 2018 and 2019. And now here we are for the first time. The cycles always throw us a curveball. For the first time, Ethereum went home in the post-halving year, right? 2025, rather than the pre-halving year or the halving year or the midterm year, right? This is the first cycle where it happened in the post-halving year. And so my guess is that it still could go lower, right? It could go lower into the regression band like it has previously. But my guess is it will get a bounce before too long. I want to show one more thing. What I think is happening is that this cycle for Ethereum has just been a 10x of last cycle when measured from the lows, right? This first low for Ethereum there was about 80, right? Around $80 or so. And for this cycle, the first low was 10x that, right? It was, we look at a price label, right? It was 800. So you have 80 to 800. The next low over here was around 100. This low was 1,000, right? The next low was 150. This low was 1,500, right? So it's basically just been a 10x difference. And then what happened with Ethereum is it came down to the fair value and it went down to around 130. Well, guess where Ethereum just bounced from? 1,300, right? Like it's basically just a 10x move. The only thing is if the entire pattern completes, then you might get one more lower low at the lower part of the regression trend line around 1,100 or 1,200, which would be, I think, a pretty good accumulation opportunity. I already own it, right? I mean, I for a long time I was just basically Bitcoin only because I was very optimistic about Bitcoin dominance going up. But I think I have hopes that Ethereum will bounce somewhere in this range and it will get this rally, right? It'll get that rally. And then from there, it's not impossible for it to go to an all-time high in that scenario, right? Like I think you get your sort of your pre-recession rally, if you want to call it that, and then maybe this is sort of indicative of the markets finally accepting that type of a move. But this is one way to look at it, and then the other way to look at it, which is also frankly optimistic, is what happened with the S&P 500 in 1990, right? If you look at the S&P in 1990, we had a recession, and it wasn't a 50% drop. We had a triple top, right? We had this triple top right here, and then we had some lower lows, and it was on the third lower low, right? You had a low, and so you tested the high. You went to this high, then you came lower. You found more buyers. You tested the high again, not good enough, right? It came back down. Found more buyers. Tested it again, still not good enough, right? Into a recession, find even more buyers, and then on the fourth attempt, it broke through. Now look at Ethereum. It kind of looks the same thing, right? You have the same type of structure where you have a high, right? You test the high, not enough buyers to break through. So you go down, you get some more. Try again, still not enough. Go down. You try again, still not enough. What if this is the drop into a recession low, right? And I know a lot of people have a hard time believing that we're in a recession And we might not be, but if you look at the Atlanta Fed, they've been projecting negative GDP for Q1 basically the entire quarter. So it's possible we're just in a recession right now. No one knows it, and maybe Ethereum's about to bottom in a recession low, and then it gets a rally like the S&P did, right, where it just comes down here, and then you get enough buyers in the regression band when it finally came home. I think the fair value of Ethereum is around 1600 because that's what the regression band says is the fair value, right? I think that's around what the fair value is. And we're right around that right now. Sometimes we can go below it. If we go too much below it, I think you'll get even more buyers and then you'll get another run up to the highs.
Ben, I want to have you back in 3-4 months. We're going to revisit some of these charts. Before I let you go, Cardano. What's next for Cardano?
Yeah. So I always get in trouble. But
Because you talk truth? You weren't wrong, were you?
no, I mean, I thought that ADA would bleed against Bitcoin. And I remember telling, the audience a long time ago that would go to 400 sats. And, normally when I say stuff like that, it's at a low, like it's like one of these things where, I'm on a channel, I say it, and then, shortly thereafter, the market rips me a new one. And then eventually it just sort of fades. With something like ADA Bitcoin, what it seems like is the most likely outcome in the short term is, unfortunately, like it's probably going to keep coming down here. Because I mean, if you look at this, it's almost a carbon copy of last year, right? I mean, you have a high in December of 2023, and then you have a high in December of 2024, and then it just sort of slowly bleeds down, and it just kind of seems like it just seems like it's going into the same pattern that it did last year around this time, right? And therefore, if that continues to be the case, which it probably would be if the Fed does not in QT, then you would probably just expect it to not really gain any more momentum potentially until late October, November. So I'm kind of thinking right now that ADA is going to bleed against Bitcoin until probably late October. I would say that's my base case. I might be compelled to change my mind on that if the Fed makes a big change in monetary policy. But as long as there's not a big change in monetary policy between now and then, I would just say that ADA is probably going to bleed again until late October, and then maybe it'll get another rally against Bitcoin come like November timeframe.
And Ben, does it anger you when you talk about Bitcoin ratio, but then it goes up in USD value, and then people tell you you're wrong because you're not talking about USD. Cardano could go up USD.
Yeah, right. Yeah, but my point is like if Cardano only is going to go up on its USD pair if Bitcoin goes up, right? And I think Bitcoin dominance is going to go up. So I don't really care if ADA goes up on its USD pair because it only is going to go up if Bitcoin leads the charge. So if ADA going up is dependent on Bitcoin going up, then why not just hold Bitcoin? And you might say, well, can't that always exist? There are times in the cycle during looser monetary policy where you can have a time where alts go up even while Bitcoin's not. Right. But I don't think we're at that time. I don't think we're at that phase of the cycle right now. We might be getting closer to it, but I don't think we're there right now.
Ben, flip the screen back to just us if you would. Thank you so much for sharing your charts. Final thoughts for the Altcoin Daily Army.
Yeah, look, I would just have a strategy and stick to it. And at the end of the day, I think if you value your portfolio in Satoshis, you'll do pretty well over the long haul. If you value your portfolio in US dollars, you'll probably make more emotional decisions. I've done that before. I've made bad decisions. Whenever I started valuing it in terms of sats, it just makes it a lot easier. You don't have to, you're not that concerned, right? I mean, if you see an altcoin down, it's probably because, you might get emotional and make a decision. But if you value your portfolio in Satoshis, and if you ever do own altcoins, remember to take profits back to Satoshis before too long. As a lot of people have learned, altcoins like to round trip their gains on their Bitcoin pairs throughout a cycle. So just value your portfolio on Satoshis, and that's the way to be successful in crypto.
I want everybody in the Altcoin Daily Army, if you don't already, so many do, follow Benjamin Cowen, link down below. Thanks, man.